What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis video as well on Sundays to give you some more technicals to get more granular. So again, I like to have this particular video where I go over my thesis on the market and where we're headed essentially over the next probably like 2 to 3 months, potentially maybe even 6 months. And then I get in the technical analysis to kind of match up what my thoughts and theses are for the week. So with that being said, like always, what we like to do around here is we like to kind of recap the previous week and how that kind of plays in the upcoming week or upcoming weeks, and then go from there. So over the past week, again, we're still in the middle of earnings cycles, so keep that in mind. A lot of, again, companies right now will continue to report earnings all the way to the end of the quarter before we get our new front-loaded, again, earnings starting in July. So we got about another month before we start a whole new earnings season again. And again, like I said, like I've always stated, what's more important is essentially the front-loaded half of that earnings to kind of really understand what's currently going on, and then we kind of go from there. So right now, what we did have and what we're seeing and continuing to see is that things are becoming very, very weak. It's starting to reflect in a lot of earnings cycles. We've gone over a lot of the earnings on this channel already and talked about some major hits that some of these big, well-named brands have been getting over this past quarter. And we can only imagine what the next quarter is going to look like with interest rates unchanged at this point. So over this past week, we still had two good earnings. There was another one as well. I know MongoDB did really well on paper, but they got slammed down. Much like CRM I have on here, they missed revenue since the first time since 2006. Again, they didn't miss by much, but it was just enough. The headline news with this whole missing revenue by the first time since 2006 really essentially caused the stock to drop. I think it was like 17%. I think it will rally. They have one of the best rap sheets around as far as all businesses are. So I think they'll recover quite easily. Again, a lot of tech is doing very well because the overhead isn't that bad. Essentially, all they're paying for is the services, whether they're using Amazon or whether they're using Microsoft Cloud. And then aside from that, I mean, their overhead isn't that much. So, and again, if they need to trim, they essentially just lay off some people, and that kind of helps with any kind of issues they may have there. But we also have KSS, which is Kohl's. They fell 25% after an unexpected reporting a net loss of what do we have here? A net loss of 27 million in Q1. This is what I'm saying. It's not the first company again that's had massive losses like this. Again, a lot of essentially excess spending is being cut because people just don't have the extra cash, right? And even though a lot of these reports have been manipulated to believe that inflation is under control, it is not. And I've talked about this over the last quarter. They took a lot of important items, inflationary items, out to try to keep that inflationary number on expectations or below, because it kept climbing up and continues to climb up. And even pre-pandemic, these numbers are still up over 22%, and nothing has really changed. And that is very, very bad and concerning, because that may lead to more interest rate hikes, which is putting more pressure, and understanding that our current economic system is essentially in meltdown mode at this point. So to raise it even more, you're going to cause a lot of serious issues if you have to raise it. But we are getting into the point where we're getting stagflation, to where inflation is high. Work is, I could almost bet on the fact that we're going to see double-digit unemployment. I do believe those numbers that are reported there as well aren't reflecting true numbers. People are working 2 to 3 jobs. People can only do that for so long before people just give up, and people just are doing that at this point and not paying a lot of debt that they owe. And understand that a lot of people are getting hurt very, very badly about that. And once those unemployment numbers start really skyrocketing up, which a lot of companies are forecasting, is that it's going to be a very, very bad time. And then people, um, again, then you're going to start, they've already been trying to filter a lot of essentially the delinquencies and the foreclosures, and they're trying to keep wraps on it so people, it doesn't create panic, because it is happening right underneath our nose. And I'm sure a lot of people out there that who are even listening to this see this firsthand. So you have to understand that we're in a very, very bad situation, and things are not getting cheap. People are eating at home a lot more. It's a luxury to go to McDonald's, to go to Chick-fil-A. It's a luxury to go to these places because they're way too expensive. People can't afford it. And now these companies are starting to see that it's cutting more in their profit, that they have to do something. And so they're trying to retaliate. Starbucks, McDonald's are trying to have some kind of like super low value meal, or you know, package that they can start selling to consumers because it's getting too expensive. And again, understand, we had Walmart and Target report, and what a difference, because the essentially the general store brand within Walmart is a much better quality than that of Target, and so people are going to or Walmart because it's a lot cheaper, even if it's just a couple bucks. At this point, a couple bucks really matters because you're paying a couple bucks on inflation. And so, again, I've talked about this. People are skipping meals. And again, people are trying to cut expenses where they can because it's getting way too expensive. And again, you're seeing upticks in inflation on used cars because of the fact that people aren't buying new vehicles. Or if they have bought a new house or they bought a new vehicle over the last 2 years, they're realizing all the hidden expenses that come with that. And understand these hidden expenses have a lot of inflation in them, especially taxes, and again, maintenance are very, very expensive. And so people aren't seeing that when they're just looking for that monthly payment. They go, well, I can afford that, and then realize there's an extra, $200-300 attached to that, potentially even more now with inflation. So that it makes it extremely hard on the consumer. Being said, GDP, this should be GDP, not GPD. GDP came out on Thursday, and we got 1.3 actual versus 1.3 expected, and previous was 1.6. Again, we're dramatically dropping in GDP quickly, and now the expectation is getting dropped lower and lower because of the fact that if we hit expectation, the headline news was we hit expectation, not that we missed by X, Y, and Z percentage, and that's more of a fearful headline. So they're trying to use these expectations to their advantage. And then on the core, hit 3.6, up sharply from its 2% reading in Q4 of 2023. It was really more stagnant, so it's been kind of stagnant, but it's still very up sharply since the Q4. Remember, Q4, you had Powell talking about how we were going to get all these cuts, that this was going to be the bounce back year. It is not the case. It is getting a lot worse. And the only reason why gas prices are even holding where they're at is because Biden just tapped into all of our reserves. Again, once those reserves are all gone, then we're going to be in trouble, because gas prices are going to be extremely high. And in the back half of the year, you're going to see that, and it's going to reflect that. And so, again, you have to understand you're in election year. So, again, a lot of things are going to be manipulated. It's not just this year. This always happens around election year. This is just something that happens. So you have to keep that in mind. And they're also shielding the fact that things are in really, really bad shape, and not trying to get political. But you also had, the Trump verdict going on this week. He was found guilty. There's going to be a lot more tension going on over the next couple months. You have to know it is happening within the U.S. Something I always talk about. If there's any kind of political things, actions occurring on U.S. soil, it will start affecting the U.S. economy. If you start providing more uncertainty, the people aren't going to want to expose themselves in markets, because they may wake up and the thing may just fall. But on the same token, we've also talked about how the U.S. Treasury is also doing buybacks over the next 2 months, all the way until the end of July. And so you have to know the market will start pushing up. And again, this isn't a reflection of what's actually going on in the economy. This is just overspending to make things look like they're better than they actually are. So you have to be very mindful of that. And again, things are breaking as we are talking, and as more new earning cycles come about, you are very close to again, having that thing break so severely bad, and then people are walking on eggshells and in panic mode because they're in survival mode. A lot of people are in survival mode, so you have to keep that in mind. And also, new single family houses for sale have essentially surged to 480,000 in April, the highest since 2008 financial crisis. So what's going on in the housing industry is you have to understand that a lot of new houses are getting built or like being abandoned because nobody can afford new homes. This is why initially there was a lot of incentives to try to get people in to buy these new homes, because remember they were building these homes because of the massive surge or demand for new homes just 2 years ago. And then now, with the rapid increase in rates, people just can't afford these new homes. People can't qualify, and all the monies and savings that they had, 2, 3 years ago, they don't have that anymore. So nobody qualifies to buy these homes. So now all these developers are building out. I've seen it in multiple different cases where they're building out these essentially new complexes, and then essentially nobody wants to buy in that community, so then they try to rent out the community, and then they can't rent out the community, so guess what happens? Then they have to start essentially doing massive price cuts, which puts things more strain on the demand. And again, your double digit unemployment isn't here yet. Once that starts pressing, a lot of families are moving in together to try to absorb cost. Again, you can only sustain this for so long, and people are essentially almost at their limit right now. They're really pushing that limit. There's been multiple data sets that have come out that more than about 50% of people, they can't afford $1,000, $2,000. So if there's any kind of emergency that happens, that is going to put people in bankruptcy. That is going to cause businesses to essentially have to file for bankruptcy, and then people can't pay for any of their items that they perhaps have bought because of the fact that they lost their job and then they can't find a new job, right? Why are you going to go work 3 part-time jobs and you still can't even afford to just go to work? People aren't willing to do that. What's the point of going to work if you can't afford anything? So again, we're leading to a very hard landing. So despite them saying that things are, strong and resilient, is a lie. These are the same things, tactics that have been used back during the 2008 crisis. You also have to remember Yellen was the chair Fed at that point, and now she's the treasury. So again, very interesting what's going on. Again, if they could try to push this out beyond the election, and again, the election is going to be very crazy this year. I wouldn't be surprised if there's a lot of riots and everything else. So those are all kinds of things you have to keep in mind. Depending what way it goes, I don't think it matters what way it goes, but I think there will be a lot of craziness going on over the next couple months. So this next week, again, we don't really got a lot going on, but what really matters is we have non-farms. We saw a big dip on the last non-farms. We'll see what happens on this one. Again, they keep essentially adjusting these to fit their expectations to make everything look like it's strong and resilient, right? They're continuing to do this until something breaks that is they won't be able to control, and then they have to be reactionary, which is essentially what they've always done. And so again, Friday will be a big day. The market's pricing in a little bit more this week than it has over the past 2 weeks because there really hasn't been much going on this past 2 weeks. Again, there's been some great earnings, some great insight, but that's not going to essentially move the market. So we're waiting for something bigger to happen, and it just hasn't happened yet. Again, when you start hitting some of these big data points like non-farms, you run the possibility that this might be the thing, or new earnings cycle, it might be the thing. Again, they like to flood us with information during earnings cycles, especially the front half of it, because they report all the industry leaders. They flood us with information around that time, and then that may be the time when we get a piece of information that actually starts selling off the market, or essentially forcing the Fed's hand. The market just isn't going to sell off. It could sell off to some fear, but ultimately, when the rates start cutting, because that's a bigger action that's being taking place from the Fed. It means things are serious. The market will start pricing in a recession because of the fear that is along with that, the rapid rate decreases. So it's the upcoming event pivots again. We don't have monetary policy to the 12th, so that's coming up shortly. We also have the core on the 12th, I believe. I have to double check those. I don't know if they're on the same day. They might be on the same day. That'd be a pretty crazy day if they are. They like to typically separate those. One's probably actually on the 13th as opposed to the 12th. So upcoming earnings doesn't start till July 1st. Again, that will be a big time for us to really pay attention. Again, we're getting very close for things to break. There's a lot of expectation around June that something may happen in June, especially around Taiwan, potential attack on Taiwan. Again, you got some money being fed in every week, $2 billion every week for the treasury buybacks to keep the bond market afloat. You have to understand that's big, right? You have to understand that everything's wrapped in these bonds, and that's essentially what holds loans and home loans and automobile loans and all these other different things that are out there. That's essentially what's keeping the market propped up. So if they're essentially spilling $2 billion in the market for the next 2 months, the market's going to go up. And until something changes, again, that breaks dramatically and changes the narrative, will continue to go up until that happens. And again, if inflation wants to continue to rise with these buybacks and everything else that's going on, it's going to be a major issue. And then again, I think they're going to try to postpone this. They've been burning money like crazy because of the election. Whoever takes over, they want to try to do what they can now. And then again, I think that's a lot of it's protective in case potentially Trump goes in. Again, not trying to get political, but again, I see it more as a government versus the people as opposed to anything else. But with that being said, again, not trying to get political. I'm just stating what I am seeing and observing in the market, and understand that this is one of the most important elections, because I think it's going to be a very pivotal election to where it's going to affect our markets tremendously, which way it does swing. So just be mindful of that and the volatility that it will bring coming into this year, or coming into the back half of this year. So expected moves: XPX raised up to 61, Tesla raised up a point, Boeing raised up a point, and then obviously JPM hasn't really done anything. It's still very, very low. We're still right around average, but again, last week was so blah that there really wasn't anything priced in. I think last week was more of probably one of the lowest price-ins that you typically see during a low cycle, and then you start kind of upticking going into when you start getting close to the new earnings cycle. Again, you'll have non-farms this week, and you'll have core and stuff next week, which will be important. And then you'll kind of get a little bit of a lull. Then you get a lot of Fed speakers, and you get a Fed blackout week, and then we get monetary policy as well coming up. Actually, it's Fed blackout week this week, and then we have monetary policy next week with core, and then you're going to have about 2 weeks of nothing really going on, and then you're going to essentially go into the new earnings cycle, which again, you'll get front loaded with tons of information. Hopefully they can again sweep some of it under the rug, and then hopefully nothing breaks anything. Again, that's what we are looking for something to break and rates to be cut. Again, you got a lot of things are going to go on. They can bring some pretty heavy selling, but then again, you have to ultimately understand that, and this is something to keep in mind, is that the market could just start selling off, and there may not be headline news, right? There may be something wrong with the bond markets. Again, this is why they're buying $2 billion worth of bonds every week for the next 2 months. You have to understand this is going to push up the market, and with that doing so, again, you have to understand that that is going to be hard to essentially take the market down during at least these next 2 months. And so just keep that in mind. Not saying it can't, but more than likely the odds are in the favor of the market going up over the next 2 months until we can get closer to the election. Again, they're going to try to attempt to push it over the election, and then you get all the craziness going on with the election. So, and then you got a lot of the debate that happens in the end of June. You got essentially whatever the actual not the verdict, but you got whatever the outcome of the verdict is for Trump as well. I mean, you got a lot of big events that are coming in June. So June's going to be a very crazy month in general. So if stuff starts to break again, what you're looking for is for the Fed to start cutting. Once the Fed start cutting, that means things are bad, right? They can talk about how they want to cut because things are bad, but again, until they take that action, the market will not react or start pricing in a recession until they start cutting. And again, a first cut isn't going to do anything. I'm kind of expecting a cut. Biden said there would be a cut at some point between now and going into the term. Again, a small 25 point basis move isn't going to do anything. I can see them just doing that to appease everybody for the election. But then again, the same token, I think they're going to be highly concerned about what happens with inflation. If they do that, they may be testing it. The problem is if they do that and inflation starts to run away, that is going to cause even more fear. So then that will essentially induce new fear into the market because, again, inflation's running away higher for longer, even though people are already working 3 jobs and it's already really hard. Things could get even really harder. And you have to understand that that's going to be a very hard landing because not only people will be getting laid off, is you can't find anybody else out there that is hiring. And so that is the biggest concern that we are seeing. So again, there's a lot about ready to happen. You just have to be prepared, know what stocks, be patient, load up on cash and get ready with your list and what you could potentially be buying. So with all that being said, if you made it this far, go ahead and drop a like. And until next time, I'll see you guys later.